Welcome to Section 5. You're going to learn how to find trades and targets today. This is a section most of you have been waiting for. In the previous section, we went through a sample trade. Just an example, it wasn't a real trade. It was also a very small trade, and I don't want you to have an illusion that that is all that we're here to teach you. It's simply an example. The reason it's so important is because we have to understand that once a transition like this takes place, we have the ability to use the profile to tell us where it makes sense to get into a trade and what that's likely to cost us if we're wrong. Now, in this example, I used a very simple 2-to-1 target. So we had a 5-tick initial stop, and I simply said, we're going out 10 ticks, which put our target at 46.69, which was picked up. Now, the reason this is important for us is because we, yes, want to have a multiple on our risk, always on our targets, but if we're doing such a good job of finding a trade, we should be able to do just as good of a job finding our target or our targets if we're looking to trade larger size so that we can take out profit along the way. In order to do that, I want to try and take a step back from the chart and show you how these various transitions will play into your ability to read a chart very well, such that you can always have not only very good entries, but very precise targets or take profit levels as well. Let's start by looking at just the data that's on the chart right now. We know that the market was trading higher and it then turned lower, and that's where we caught our transition. So we had sellers in control until a point where the buyers then took control and the buyers accelerated through. It would make a lot of sense for us to look back at the last place where the sellers were able to take control. And if we look back at this prior high, we can note that the buyers tried to buy up and then it went neutral. The buyers tried to buy up, and while certainly positive in their single period, they were unable to get above where the prior buyers were either. So not anything that indicates we were really in some sort of upward momentum. The sellers then come in and push lower, but unable to carry it very far until then the buyers lift back up into the prior cluster and accelerate lower. Sounds very familiar, doesn't it? It's very much like what happened here on our transition, where the sellers pushed down, the buyers tried to prop the market up, the buyers lifted up a little, and then accelerated down below. Let's draw a profile across this and see if we can see the point at which the transition from buyer to seller took place. Here's our profile across those 4 periods. You can see the selling profile indicated in red. You can see that the last traded price was outside of the value area. You can also see the point of control. This region makes a lot of sense for us to be looking for a take profit, because as the buyers were able to hold the value area down below, so should the sellers be able to hold this as well. Now in this case, we can see that we've already at least traded up to the point of control, and we know from prior videos that this ends up accelerating far beyond this high. Again, the original sellers are the ones who need to convert for this to expand any higher. That's when the bonfire or the towering inferno starts to come in. So if we were to look at our point of control here, I'm just going to draw a simple ray from the point of control to where we're trading. You can see that that came in at 72. Now, if the sellers are able to hold this below the value, the edge of value, which looks like it's up at maybe 75, then we would certainly be concerned that the sellers are coming back in and potentially holding this for what would effectively be a double top. That means that a very effective place for us to have our take profit on this move up is to look back at where the sellers were in control and find something within this range that fits not only our risk profile of trying to find some multiple of what we're risking, but also makes logical sense so that we don't have a target that's simply 1 or 2 ticks outside of where the market stops advancing. In this case, rather than using 69 as a take profit, we very easily could have logically and simply, objectively come up with 71 without having to be subjective about it. We can simply say, well, if we get right in front of the point of control, we know that that is the fair price for when those sellers were last doing business. In this case, we of course traded through it, and I think now it's very important that we go back and we start looking at the chart to determine where other take profit levels might be, and more importantly, why this low was so significant in the first place. To tell this story properly, I'm going to back up deep into this morning. The trade that we're talking about happens about 8:30 in the morning, and I want to go all the way back into the London Open. Let's begin by looking at some of the activity from much earlier that morning at totally different prices and see if we can begin to block out a logical process for why we traded to and from various points on the chart. We can see that there's a decline into what becomes a basic double bottom. What I'm going to do is start putting basic profiles along the lows and along the highs and key transition points so that you can see the type of reaction that happens when we come into prior levels. We put in a low, we lift back up off of it. You can see the retest into it, another lift off of it. We trade right back down into the same low. When we put a profile on this low, we then trade up, we break through anything prior, trade up to a point where you can see the market lifted a little bit, stopped, and started moving back down. Well, why do we think that might have happened? Well, let's go back and look at what happened prior. Here is the area where the prior sellers took control of the market. I put a small profile on this. We can see that that's exactly where we have the same issue with the market moving up, holding, and potentially pausing for a moment. The market then breaks out and moves up to new highs. The sellers then come in and bring the market back down. Where does the market trade back down to? Well, interestingly enough, it trades right back down to where this transition, where the buyer bought up, the seller tried to hold, and then the seller broke through and was able to buy up to the highs. That's exactly where we came back down to. So let's take the high and mark that off as well. And I'm not going to be exact with this. I just want to give you an idea of where the overall volume transitions are. So we come off the high, we move back down into the prior transition, which was the buyer held back by the seller and then the buyer buying through. We can see that the market held here for a little bit before dipping down. Where did the first move down to? Right down into these prior lows. Then we move down a little bit lower and move sideways. Two main points here. We have the volume that took place here, and then of course we have the volume that took place after we break down. Now, in the morning, the market breaks down and puts in a low. Off the low, we see the market lift. This is the low volume of that low. We lift up, we retest directly back into it and lift back up. Interesting. Directly into the point of control. That transition from seller to buyer then produces another value area, which isn't quite touched here, but as the market lifts back up, and where does the market lift back up to? Here is our key volume across the last place where the sellers came in. That's basically where the buyers buy up to. And then as the sellers come back down, where do the sellers hold? We're basically right at the prior value area. Well, interestingly enough, we have sellers that took control up here, and we can already see from the chart that's where the buyers bought back up to. Let's mark off this low as well. And as we move the market over, we can see that this time the buyers did in fact buy up all the way to the prior volume here. But as the sellers drop it back down, where did the sellers drop down to? The prior value area transition. So with that, we can see throughout the morning, prior to our trade, we have the sellers coming back into the value area and the buyers driving back up to the respective value areas here. More lows trade into the prior value areas until we get down to here. We then have a high trade up, and you can see the high that comes in is actually the high that we were suggesting a target off of. Now this is the interesting part of the scenario, because here we have this last low that came in this case at about 8.15, and this is the market breaking down. And when the market breaks down, where does it break down to? Well, our transition comes in right at this same sequence of lows that's been going on all morning. That's what made this such a valuable opportunity to us. It wasn't that we held the low exactly or held this low exactly, or for that matter that any of these held those exactly. It's that the opportunity exists to trade off of these transitions when we see that we're bouncing into very logical points where the market should be holding based on prior transitions. So with that, as the market moves up, it makes a lot of sense that if we have the ability to take profit, we take profit at logical points along the way. Well, what are those logical points along the way? We know the one that we've just hit, but where else should we be looking in this chart? Well, we have the volume that breaks down here. So all of the volume across, just going to move this back a little bit, squeeze this up. We have two key points above us. We have the volume that was held here and the volume from the absolute high. Well, let's draw some lines on these various points of control and see how the market reacts when we hit these coming back even later in the day. So back to our original point, this is where we get into the trade and we see the first logical target being something very easy that gives us a multiple on our very low risk, small drawdown entry. Well, we can see the market lifting up, and sure enough, we've just traded up and bouncing off of the exact point of control that we found from much earlier this morning. Remember? There's our high, and that's exactly what we're trading against, bouncing off of it. So it would stand to reason that taking profit in front of those key transitions will certainly be a good way to avoid having the market come back against a strong position. Let's continue on. Well, the market's trading through that transition. We continue higher until the sellers come back in and start pushing back. And where do they push back to? More or less right back to the other edge of this transition that we found from earlier this morning. The buyers come back into the market, and where do they trade to? Well, that would be the transition off of the high from much earlier in the morning. So you can see with the rotation off the high coming almost all the way back to the prior level, we now see how each one of these transitions plays into our ability to effectively take profit before the market stops the momentum and begins to turn around. We can see the effectiveness of the low that we bought off of, given that we were stair-stepping up all morning, catching another low right at where we've had lows the rest of the morning is a good place for us to be looking for a long. We should now understand exactly why the long was taken, and not only why the long was taken, but how there are logical places for every size trader to be able to take profit along the way. All of this is from volume clusters that began much earlier in the day. And the focus is for us to just look at the transitions that exist on a chart so that we can see whether or not we're at a key level that might provide a trading opportunity, or if we're already in a trade, why we might want to take profit. And certainly if we're in between anything that looks like a key volume transition, it makes no sense for us to be putting money at risk. Our next class is about bringing all this together with an example trade scenario you can review on your own charts, or to really apply the lesson for mastery, replicate with a market replay function to simulate how you might have reacted as an OFA trader.